we're in a really strong market. I mean, there's a ton of leadership. And it's broadening. And in fact, if you look at the top 10 sectors, there's not even a lot of tech in there. In fact, tech's really been kind of on the back burner for the last, month with the down, the S&P, closer to new all-time highs than the NASDAQ. But I think the NASDAQ would catch up, um, you know, can catch up really quickly. And there is a lot of strong leadership in tech as well. I mentioned a few of those tickers. There's just so many of them. I have a whole page of them. So my feelings on the market is we're in a bull market. Um, I think that everything is set up well for a strong year end. Um, it's been a little bit choppy here on the NASDAQ. We came down the past few days. We've got support at the 21-day moving average, but we've got a positive economic outlook. The Fed is now on a easing cycle, and we don't fight the Fed. And the market was so devastated with the tightening cycle. There's no reason to think that with them now loosening, we've got kind of that backwind with the Fed. With the employment number here, there's been this wall of worry that and there's such a strong wall of worry, which is so supportive of an uptrend. So we've got the conflict in the Middle East and just geopolitical uncertainty in general. We have the election uncertainty. We have recession fears, the port strike. Those last two are kind of getting cleared up with, it does appear that the economy is still strong, that we're going to achieve a soft landing. So we have, we've had this wall of worry and all this uncertainty. Those are getting cleared up. And I think the consensus view is that we were going to have a weak September, which didn't really pan out other than the first week. And now I think the consensus view is that October is going to be weak until the election. And then once the election is cleared up, we're going to rally into the end of the year. But, the market doesn't always cooperate, with the consensus and what everyone's expecting. So I think there's a lot of money on the sidelines waiting for a pullback. And I'm not so sure we're going to get the pullback. So even I have sold some stocks into strength, and I have these like really small positions now waiting for the pullback, which just isn't happening. Um, so that's really tough. That's kind of the downside of swing trading is sometimes you don't get the pullback. So we've got tons of stocks like APP.
Yeah.
I sold most of my position. It just keeps running. Even Palantir, uh, I sold in my personal account and kept some others that were pulling back, which was the exact wrong thing to do. You want to keep your strongest stocks and get rid of your laggards or things that aren't working as well. So I think Palantir looks great. Um, there's just so many stocks out there that look great that aren't pulling back. Like Shark Ninja was a stock I had a position in, waiting for a pullback, and they're just really strong. So I think we're in a really strong market right now. The psychological indicators aren't like showing grossly overbought levels. Even the short-term oscillator is actually really constructive right now, showing, actually oversold conditions. Yeah. So it's really, I think the backdrop is great. And I think we're gonna rally. Oh, I know what I was gonna say. So I was on this IBD webcast a couple months ago, and I was talking about how it was feeling a lot like the latter part of 2007. And I always go back to this time period because it was a time period where it was a strong market, and we got the sell-off in August. And coming out of that sell-off, the market rallied into kind of its final move up before you had all the financial turbulence and and the the Great Recession and all that, and um the subprime mortgage crisis and all that stuff. But in this little window, I like doubled my account in like 2 months. So I always go back to like, okay, I want that period again. And it kind of felt like that is what's happening with the sell-off that we had in July, August. So we had this time period here, and the stocks that were working back in 2007 when we came out of that were Baidu, Apple, Google, and like you can pull Baidu up back in this time frame. And it was the one that took off. So that would be like pull up, yeah. And it just kept going up. And this was my big winner back in that time period, along with Apple and Google. And this looks a lot like the APP and the Palantir and the GEV and Shark Ninja. Like they just worked for,
Mhm.
basically a 2 month period,
Yeah.
2.5 months. But that's all you need. You just need a window of opportunity. So, and then, the market turned and we went into a major bear market. I'm not forecasting that, but I'm just saying that the feeling of the stocks breaking out so powerfully feels like this time frame too. And, coming off that kind of quick short correction. And fundamentally what was going on in this time frame was rates were at 5.25%. They've been held high there for about over a year. And Countrywide, which was the largest lender at the time, was forced to tap their credit line. And there was some reports that the economy was slowing. And so the Fed started this easing cycle, which is a little bit similar. You got at the beginning of an easing cycle. There's signs that the economy is, slowing a little bit, navigating the soft landing. So anyway, the setup is a little bit similar. Many of the leading stocks back then feel like the stocks today. So I'm pretty constructive. I mean, I think if you navigate this properly, I'm probably gonna jinx the whole thing now, but if it's possible to really have a really strong year end, so I'm constructive.
So when you have the macro backdrop that we have, when you have the kind of index action and setup that we have, and leading stocks acting how they're acting, Charles, you've been in a lot of market cycles. How would you rank this current setup, or how do you see this as something that traders can take advantage of? You said we could see a good couple of months here or into year end. Obviously, we can't predict, but just all of the factors that you laid out, how bullish does that make you?
Super bullish. I think everything is set up. I mean, and we've already had it's already been a great year.
Mm-hmm.
It's already been, one other thing that we have on our side too, which is huge, is a backdrop of innovation and new technology and new innovation in the form of AI. And we're still, I think, at the very beginning of this new, leg of AI and everything it's going to offer. I think it's going to be huge for productivity. I think it's going to be, I think costs are going to come down across the board for all industries that can adapt and take that on. So I think the economic backdrop is great. I think we've got this new secular um, theme of AI and everything that it touches, and it's going to touch so many industries. Even, we are just talking about the ports and innovation, and everyone's afraid of the innovation. I mean, robots are coming, guys.
Mhm.
They're going to be here, and they're already coming. In warehouses, and they're already, moving moving boxes and equipment, and it's just going to accelerate. So I'm extremely bullish. for the short and for the long term, to be honest. But I'm always bullish, aren't I? Seems that that's always the case. But yeah, I think it's all setting up, and just look at the markets, right? I mean, it's been a really strong year already. One of the best years in the last few. And I think there's gonna be great opportunities. I think there's great opportunities now and just going forward. So this is about taking the leadership. And I think this is a market where you stick with it. You don't get too fancy trying to pick all the little um, peaks and valleys. It's you find some great stocks and hold them. I think, I'm really constructive on the market. The market is, there's tons of leadership. The market has really broadened out. That's what people, all year long where people were, talking about how narrow the market was, and it was all, stepping stocks leading everything. Now there's just no shortage of stocks and
Mm.
in a very diverse group of industries. So, I think everything is really setting up. I hate to say it, but it's things look really good, and there is still that wall of worry that we're climbing. So I think the environment is ideal. There's plenty of merchandise. I think what I would say to the listeners is don't just focus on the chart because there's a million charts that are going to look great. And if all you're doing is screening all day looking for the next pop, I mean, that's one way to trade. And honestly, it's kind of what I did earlier in my career was just really trade super actively and, buying breakouts, selling them for a quick pop, and then moving on to the next. And you can do really well doing that, but it's what I try to do now really is more find the leader and stick with it. And so that's going to require you to dig a little bit deeper than the chart and find out really what the company does and why is the stock working. And I think it's important to really get that level of conviction if you're going to be really successful in the market and stick with something. So I think that's what I would do is tell the listeners to find some charts that you like, but then dig in deeper and really build a level of conviction so that maybe you can hook one of these big winners and really ride it for a significant move.